And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Scarlet Fu, taking you through to that closing bell with a global simulcast. It's already started. There's Carol Massar in the radio booth. There's Tim Stenovec right by her side. We'll see them in a second as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. It took us a while to get the shot up, and then Carol was still trying to get that last strand of hair in place here. Carol, what are you looking at?
You're not supposed to tell my secrets. I mean, come on. Obviously, we're thinking about the chip sector in a big way. Intel reporting after the closing bell. Listen, they are continuing to work on their turnaround. We just talked with our Kunjan Sabani, said the foundry is so crucial to the business, so that's one stat that we have to keep an eye on. But also said that he has the CEO, about 18 months to kind of pull it together. So clock ticking on this one.
Yeah, I was saying the Intel turnaround story has been
18 months?
18 months to kind of figure out and at least make the sentiment change. I know.
Okay, yeah, that's quick.
I said I do not envy Lit Bhutan's task ahead of him. I mean, we've had how many CEOs at this point? 3 CEOs try to turn around this company in recent years.
Mm-hmm. Yeah, it's a tough go there, but I mean, he knew what he was signing up for. And of course, as we await earnings, we also want to get a sense of what demand looks like for those companies that are at the white hot center of the AI revolution too. Intel might very well give us some kind of picture, even with its specific problems.
Yeah, and I'm also interested in some of the other earnings that we're going to get. Deckers, maybe provide the footwear company, maker of Hoka's and Uggs, that can maybe provide a little bit of insight into.
It's like a window into your closet, Romaine.
Yeah, it's Uggs, Birkenstocks, and Hoka's.
He's a big fan of those three brands.
Yeah, I love ugly shoes. Just throw some Balenciagas in there and I'll be all set. The closing bells here in New York as we await those earnings. Green across the screen for the major indices. Though the Dow, a big laggard on the day, down more than 300 points or 0.7%. We should point out the S&P 500, relatively unchanged on the day, but it's still higher by roughly about 4 to 5 points. That's going to be good enough for the 13th record high of the year. The NASDAQ composite at a fresh record high, up about 40 points or 0.2%. The NASDAQ 100 up 0.3%, and the Russell 2000, that's your major laggard on the day, a drop of 31 points or 1.4%.
All right, quick check on the S&P 500, kind of an even split, although a little bit more to the downside. 286 names, Scarlet, to the downside, 216 gaining ground on this Thursday.
And the sectors are tilted to the downside as well. Consumer discretionary, which includes car makers, which includes Tesla, leading the way lower by more than 1%. Materials and healthcare also weaker on the day. On the flip side, energy stocks gaining 0.75% as oil prices rise. Tech and communication services also finishing in the green.
All right, guys, as we await earnings, some of the individual gainers, of course, Google, Alphabet, up at its highs 4%, finishing the day with about a 1% gain. As we know, the key point, Alphabet, talking about AI demand. I'm going to toss it over to you, Romaine, because we got Intel crossing.
Intel earnings crossing the wire right now. The company says that for the second quarter, it did see a significant contraction in its gross margins, down to 29.7. The street was looking for 36.6. The company also saying that for the second quarter, it's reporting revenue that did beat estimates, $12.86 billion. The street was looking for roughly about 11.8. And I believe the bottom line, the adjusted loss per share for the second quarter, 10 cents a share. That's wider than what the street was looking for. Here's your guidance going forward for the third quarter. Revenue, here's the range, 12.6 to $13.6 billion. The street was looking for 12.64. So basically the bottom end of the range is relatively in line with what the street was looking for on average. The company says that it does plan to proceed with job reductions that should account to about 15% of its total workforce. The company also saying that it says that some demand that it has been seeing as of late, guys, is, quote, a buy ahead, meaning maybe a bit of a pull forward in some of that demand.
So just looking at the press release, what's notable here is after the quotes where we got some of those highlights that you mentioned, Romaine, is the first subhead is progress on driving greater efficiency and execution. I think that gives you a sense of the theme here that Intel is working with, right? They need to prove that they're making progress. The CEO in particular is making progress with cutting costs and streamlining things to get this company in a position to be able to benefit from an upswing.
They mentioned about $1.9 billion in restructuring charges. Also kind of interesting, too, here, that foundry business, the real foundry business that everybody's concerned about, a slight beat on revenue, guys. 4.42 billion. Street was looking for 4.39.
On the capex side of things, the company said it's ending planned projects in Germany and Poland, also saying that it's slowing progress when it comes to Ohio. So that's one thing to keep an eye on, too.
Interesting, yeah.
Yeah, and I mean, going a little bit more deeper into the press release, Lip Bhutan, the CEO of Intel, talking about laser focused on strengthening their core product portfolio and our AI roadmap to better serve customers, also taking the actions needed to build more financially disciplined foundry. And again, just going back to what our Kujan Sabani said of Bloomberg Intelligence, so important, he said, to Intel's future outlook is what they do at the foundry and growing that business.
Yeah, and it's kind of interesting, too. I mean, I'm just kind of going through this, and it looks like some of the upside that we saw in the most recent quarter was from a little bit of a rebound in those PC sales. We should point out the data center business did beat slightly, $3.94 billion, as did client computing at about 7.87. But Intel products revenue overall came in at about 11.8. So you definitely, and that's been the concern, right? This idea that as they try to transition more to AI and more to these other services, how do they do that with a legacy PC business that we know had been in decline? But at least for right now, that legacy PC business still holding up. So maybe that provides a bit of a bridge for TAN.
And I'm so glad you point out the legacy business versus a part of the business that they want to highlight, the data center and AI revenue, because gross margin for the second quarter, the adjusted gross margin, was below 30%, 29.7%. Analysts were looking for 36.6%. So that's a big miss there, especially on profitability.
All right. Well, shares of Intel right now higher by about 3.1%. Starting to get some numbers out of Newmont right now. The company's second quarter sales came in above estimates at $5.32 billion, estimates for $4.9 billion. Newmont's second quarter attributable gold production coming in at 1.48 million ounces. The estimate was for 1.39 million. Shares in the after hours right now higher by about 1.3%.
All right, I want to go back to Intel because we are seeing the stock continuing to trend higher. I'm looking at our Ian King out with his right through. Right now, Intel shares are up 6%. So Street certainly feeling like maybe Intel's starting to deliver on some of the changes that it's been making. Our Ian King reporting that it gave a stronger than anticipated revenue forecast for the current period. Third quarter sales expected to be 12.6 billion to 13.6. And just talking about, as you pointed out, Romaine, company benefiting from that resurgence in the PC industry. Still some challenges, including lost market share and a struggle to attract customers to its foundry business. Again, so important to the company's future.
All right, we're going to continue on Intel, but just want to give you an update here on Deckers. Those earnings crossing the wire. The shares up 10% in the after hours trade, a 17% jump in net revenue in the most recent quarter to $964.5 million. That is a beat on the top line number. On the bottom line, EPS coming in at 93 cents a share. I don't really have a comparison for you to analyst estimates, but you see the share reaction there. Pretty healthy revenue growth in the most recent quarter, and for some investors, I guess that's good enough.
Yeah, I'm looking at the breakdown here of the brands. Romaine's favorite brands, Hoka, those net sales increased almost 20%.
What?
UGG sales increased almost 19%. However, the other brands decreased 19%. So it's very much a tale of different brands here at Deckers.
The crazy thing about that is, yeah, go ahead.
Oh,
sorry.
I was just going to say, I mean, it's clear that Hoka and UGG are powering this company. I mean, the other brands, Teva included, down 19%. Hoka bringing in $653.1 million in revenue. UGG bringing in $265.1 million in revenue. Which of those two is your favorite?
Neither, and you know that, and I assume that the Hoka thing was up because of Katie Greifeld, and the UGG's revenue was up because of Scarlet Fu's closet. But also, I was looking at the geographic breakdown. 49%, 50% jump in international net sales compared to a 3% jump in domestic net sales.
There's that weak dollar at work.
Yeah.
All right, I'm going to go back to Intel.
Okay,
you guys continue talking about. I'm just looking at Ian's story, Ian King's. Just in terms of what we're thinking about in terms of employees that are going to be there, it looks like, forgive me, I lost my place. Layoffs will reduce staff by about 15%, and the company does expect further cuts through attrition and the splitting off of business units. This came from the CFO, David Zisner, in an interview with Ian. And so they're looking to end the year with about 75,000 employees. That's down more than 20% from the end of the June quarter. And keep in mind that Bloomberg News has been reporting this out, that they were looking to cut their workforce by roughly that amount. So it looks like they are delivering on what they had said.
Intel also adds that it sees restructuring substantially complete by the fourth quarter of 2025. So we might get another couple of kitchen sink quarters here, but by first quarter of 2026, when the earnings start coming out, that's when we'll start to see evidence of improvement.